Alright, good morning, good evening guys. It is our trades back here with another video. Want to thank you guys for joining me. No camera today, just going to analyze the ES and the NQ here guys. Working on the week of Monday the 22nd of July through Friday the 26th of July. Guys, we've got breaking headlines out. President Joe Biden will not be seeking re-election. Again, that is President Joe Biden will not be seeking re-election. Okay, guys, before I get into our analysis of the week, just want to ask that you like, comment, subscribe, and use the affiliate links in the description box below. Okay, guys, let's start out here from a weekly perspective on the MES and give you my thoughts, guys. We're going to talk here from a volume profile from an ICT perspective. So last week, we reached an all-time high of 5,721 quarters. That's 5,721 quarters. Our last print on the MES before we open up for the week was 5,553.75, guys. That is a decline from our high of 168 3/4 points. We reached a low of the week at 5,542 evens, guys. That is over 3% from our all-time high, guys. So 5% is going to be a correction, 10% is going to be a bear market. Excuse me, 10% correction, 20% bear market. So we're not there yet. But we had our first substantial sort of black candle here. So from a weekly perspective, let me give you the ICT perspective. Okay? Just going to give you the ICT perspective on the weekly chart. Okay, guys. Okay, guys, so from an ICT perspective, we have a fair value gap coming in on the weekly chart, which is lower. And that fair value gap was formed between the Monday the 3rd of June candle and the Monday the 17th of June's candle. So we have a buy-side imbalance, sell-side inefficiency, or a BISI. And the market looks like it's going to want to come back into that buy-side imbalance, sell-side inefficiency, although I don't know if it does that next week. We also have a buy-side imbalance, sell-side inefficiency that we traded through this week, which is located here on the weekly chart. So from a weekly chart perspective, guys, what I'm seeing is I'm seeing an inefficiency from a long wick. So you can see I've pointed out the long wick consequent encroachment, 5,313 spot. 7.5, that's going to be located here. We've also got an inefficiency in price delivery on that buy-side imbalance, sell-side inefficiency. Now, guys, I'm not sure if you're seeing this on the volume profile, but that fair value gap there is also low volume notes. In addition, guys, notice that there's a bit of volatility coming back on the average true range. Our average true range on the weekly chart has gone back up to 120.87, leading me to believe that we could see some volatile markets and some interesting markets moving into the next couple weeks. So guys, from a weekly chart perspective, what I would say on the MES is that we're likely to head down into this fair value gap in and around the 5,468.25. I then imagine we might see some sort of a little bit of a rally, and then I think we move lower, guys. So I think that overall, the market is going to be a little bit concerned with some of the political uncertainty around town right now. But if I had to take a wild guess, guys, from a weekly chart perspective, I think that the ES moves lower to about the 5,469 level. And then I think we see some sort of a rally, could rally all the way up back to the 5,597 3/4 level, or about 5,600 round number. And then I think we move lower. So overall, guys, I've given you sort of a diagram of what I foresee happen. Market moving lower, having a rally, and then plunging lower again to come in and fill in this long wick inefficiency. Guys, we have our contract rollover here on Friday the 20th of September, so we could see a little bit of a pickup in volatility on that. Let's get down to a daily perspective here on the ES, and let's draw this out from an ICT perspective and also talk about what we're seeing on the volume profile. All right, guys, so now we have the MES here on a daily chart perspective, and I'm just showing you some of the things I'm seeing here from an ICT perspective. Okay, guys, so from an ICT perspective, I am seeing a lot of the same thing that I was seeing on the weekly chart, which is overall, guys, I think that moving into next week, I think that we're going to move lower, potentially run down in this 5,502.75, that sell side liquidity there. And then I think that the market is likely to trade lower and have maybe a rebound at the end of the week. Let's go on our weekly calendar here coming into the week of July 22nd to July 28th. Okay, guys, so we have no economic headlines that I'm seeing coming out on Monday, Tuesday, or Wednesday. We do have durable goods and GDP growth quarter over quarter coming out on Thursday. And then we have the core PCE price index month over month coming out on Friday, personal income month over month coming out on Friday, and personal spending coming out month over month on Friday, guys. So I think that coming into the week of July, ending in July 26, I think that we're likely to see most of the volatility come on Thursday and on Friday, given that that's when our news catalysts are taking place. Okay, guys, now I want to take a look at the market from a volume profile perspective. So looking here at the daily chart, pretty easy to see that the majority of our trading volume was put in right around that point of control at 5,531. Now, guys, I know that that is only a 20.5 point move lower. At this point, I would be very, very, very surprised if the market does not trade through that point of control, come down into our low volume nodes. Now, guys, if you, from a volume profile perspective, if you see the market trade through about 5,515, or about this low here, you could see a plunge, a significant plunge lower. From an ATR perspective, guys, our average true range has been increasing. As you can see, some volatility coming back into the market. Our average true range now sitting at 57 points. So my point being, guys, is that if we see the market dip much lower than about 5,500, you could see quite a bit of a move lower. So that's going to come in line with our low volume nodes. That's going to come in line with our sell side liquidity from an ICT perspective. It's also going to come in line with this long wick inefficiency that I'm pointing out here. That long wick inefficiency, the consequent encroachment comes in at 5,481 halves. So overall, guys, I think that given the political news, and I think that given the fact that most of the economic news is coming out Thursday and Friday, I think that next week we're likely to see another black candle. I think that we are going to see some follow through. Hard for me to imagine that we're going to get a green candle. Of course, everything is possible, but guys, I think next week we're looking at some more downward traction, just given the political instability in the United States and given some of the recent economic data, along with what I'm seeing here on the chart. Guys, I'd be very surprised if the market did not want to revisit 20 points lower at least to 5,531, where our point of control is. That's where the market last found its sort of agreed value. I'd be very surprised if the market didn't at least want to move 20 points lower. Okay, guys, let's head over to the NASDAQ. But before we do that, let's compare the NASDAQ and the MES, guys. So it's going to remove the indicators and remove the drawings and head us over to the MES, both on a weekly chart. So what you're seeing, guys, is the MES is on the right and the MNQ is on the left. So doing a quick comparison, obviously they look very similar on a weekly chart, but some subtle differences. The NASDAQ on the left has been a little bit more beat up. So the NASDAQ is down from its all-time high over 6%. That's down about 1,300 points. The ES has been more resilient. The ES is down about 3%. So the NASDAQ seeing more of a retreat in the tech stocks than we are seeing in the S&P 500. What that tells me, guys, is I think that there's generally a rotation out of tech and out of what we would call the chip makers or the high risk. And I think that we're going to be cycling more into defensive stocks. So If I had to take a wild guess, guys, in terms of relative strength, I think that the NASDAQ is going to be relatively weaker in comparison with the Dow and the Russell 2000, as I think there's going to be somewhat of a flight to safety coming up as we move into the fall. Now, briefly comparing the micro NASDAQ and the Dow is down, let's see, percentage-wise, down about 2.7%, while the NASDAQ is down over 6% from its all-time high. So, guys, I think that there is capital flowing out of the tech stocks and into our industrials, sort of a flight to safety kind of thing. Okay, guys, let's analyze the micro NASDAQ here from a daily chart perspective. As you can see, guys, from a weekly volume profile perspective, we've been putting in the majority of our volume just above that 20,000 evens level. So as the market is moving lower, there's not a ton of volume on this contract in particular for the market to cut through, which would be in line with our fair buy-side imbalance, sell-side inefficiency. If I had to take a wild guess, guys, the level that I'm looking at, let's get this drawn out on an ICT perspective. Buy-side liquidity, sell-side liquidity, order block 50%. And then let's draw out our fair value gaps. So fair value gap here. Currently trading in a fair value gap. The market, as you can see, reacted off the 50% point of that fair value gap as we come into an ICT fair value gap and as we come into a lower volume node. Okay, guys, so with that being said, the level that I'm looking at, or that I'm interested here in the micro NASDAQ from a weekly chart perspective, is I'm looking at that 18,966, which is going to bring us just below 19,000. That's the level that I would be watching, guys. I think we are going to see continued weakness in the tech sector. I think especially in comparison to the ES and to the Dow Jones, I think that the tech stocks are going to be particularly weak. All right, guys, let's look at the daily chart perspective. You can see that we still have our weekly drawings up. Price did just move below that sell side liquidity there. So we could see a little bit of a rally on Monday. Because there's not economic news coming out on Monday, could be a little bit of a choppy session. Guys, I think we're going to see a lot of chop on Monday, potentially chop on Tuesday and Wednesday as well, as our economic news doesn't come out until Thursday and Friday. Okay, guys, from a daily chart perspective, I'm basically seeing the same thing as I saw on a weekly chart perspective. Our point of control from a volume profile perspective is now sitting above current market price, which should provide some amount of resistance for price to move back higher. I think that makes sense also from an ICT perspective. So guys, in my opinion, I think next week's candle on the NASDAQ is going to be a black candle. I think next week, if we had a particularly down week, guys, I'd be looking at the market to break that 19,000 level. That would be a large black candle, but I wouldn't be surprised. Guys, also notice that our average true range here, volatility back in the market, coming back in the market, 641. So getting some volatility back in the market. So guys, overall, I think that the market's going to be down next week, but I think the tech stocks are going to be down more than the ES and the Dow. Okay, guys, looking at crude oil, bringing on some crude oil here. From a weekly chart perspective, guys, this is just a straight trading range. I personally think that crude oil is likely to have another week lower. Just looking at this chart here, but let's draw out the ICT perspective. Okay, so there's our sell side liquidity there. There's our buy side liquidity there. Now let's draw out our fair value gaps. So we have a little bit of a fair value gap there. Going to draw that out. And then obviously we're in a buy side imbalance, sell side inefficiency now as we speak. Then let's draw out our long wick inefficiency down here. Okay, and then I would argue also that's a fairly long wick. Okay, so guys, looking at crude oil, this is obviously a trading range. I don't foresee crude oil breaking out of that 83.57, the $72.24. I don't foresee that happening next week. That would be quite astounding. Our average true range on crude oil currently sitting at $3.30. So looking at about $3.30, I think it makes sense for crude oil to come down to the next fair value gap. I think that looking at this chart, crude oil is likely to have another week down. But the last time that crude oil moved down, we had a little bit of a retracement, so that wouldn't surprise me as well. Would not be surprised if crude oil wants to come back up to about the $81.58 range. But for what I'm seeing, guys, I think that crude oil is likely to head down to about $76.96. So I think we're going to see a small black candle next week if I had to take a guess. Third week lower. That's what I'm seeing on crude oil. Okay, guys, just to recap, I think that there is a rotation or a flight out of tech and into the Dow Jones and into the Russell 2000. So I think there is a rotation out of our big chip makers. And then I think crude oil is going to head a little bit lower next week. Volatility has been pretty low on crude oil. Point of control, by the way, is higher on crude oil. So from a weekly chart perspective, guys, the point of control on crude oil is sitting at $80.89. So we're coming into some low volume node territory, making me believe we could have a sizable down candle. Gold is also, I think, pretty interesting here, guys. Gold has been putting up new all-time highs. Point of control is lower, so I think we could be seeing another move lower here on gold. Although, yeah, that's what I would have to guess, guys. I think moving into gold futures next week, I think that gold is likely to see a move down to this point of control, 2,329. Let's finish off with the dollar index, guys. Yeah, and all of this makes sense because looking at the dollar index, let's draw this out just real fast. Okay, guys, looking at the dollar index, I personally am seeing some signs of strength. So our average true range has been coming down, meaning that, guys, if I had to take a wild guess, I think the dollar is about to move higher. I'm also seeing 1, 2, 3, 4, 5 highs right around that 106 evens level. I'm seeing a sell-side imbalance, buy-side inefficiency, sell-side imbalance, buy-side inefficiency higher. Seeing the market react off of this long wick inefficiency here. So seeing the market come down and react off of that. I think the dollar is poised to move higher. I think the dollar is going to move above this buy-side liquidity here. And guys, I think that would make sense with risk assets looking like they're going to rotate into a sell-off. I think the dollar is going to move higher. I think that's going to suppress some of our risk assets. So guys, I think that moving forward into the fall, we're looking at equities moving lower and we're looking at the dollar moving higher. That's what I'm seeing right now. I think that gold is also going to be suppressed by the dollar strength. I think that crude oil is also going to be suppressed by dollar strength. So I'd be watching out for the dollar, guys, especially with the political uncertainty here in the United States. That's what I think is more likely than not. So just to recap, guys, I think the micro NASDAQ is going to move lower. I think the micro ES is going to move lower. I think that the NASDAQ is going to move relatively lower than the others. And I think the dollar is looking like it's going to want to come higher. I think ultimately, guys, maybe not next week, but I think that the dollar is going to want to run above that 106 level. Just have a quick look at the monthly chart. Yeah, guys, I think that the dollar is looking to run above that 106 level. Lots of liquidity. We've also got a sell-side imbalance, buy-side inefficiency above that. So from an ICT perspective, I think there's all the reason to believe that the dollar is moving higher. Also, guys, just from a basic trend perspective here on the dollars, that we have been accelerating over time to the upside. Basic chart pattern here, guys, we're looking at an ascending triangle. So all things being considered, I think the dollar is going to move higher. Okay, guys, this has been Our Trades, back here with another video. This has been your analysis for the week ending in Friday, July 26th. Want to thank you guys for joining me. It's been a pleasure. Please make sure to like, comment, subscribe, and we'll see you in the next video.